Federal government responsibilities are given in the fourth schedule of the Constitution. It tells that what are the detail of the responsibilities of the federal government. In addition to that, it also outlines what taxes can be levied by federal government. So both the responsibilities and the sources of taxes that can be levied by federal government are given in the Constitution, both for the federal government and the provincial governments. To understand that what a budget or a document which is called a budget, in which the government's revenues are given and the expenditures are given, there is a component of a budget which is called revenue receipt, which comprises of direct taxes, indirect taxes, and non-tax receipts. Direct taxes are those taxes which cannot be, when it is levied on an individual or a corporation, these cannot be passed on to the consumer. Indirect taxes, which are levied on goods or services, these can be passed on to the consumer. And then there are non-tax receipts, and these non-tax receipts comprise of fines, they comprise of a fee in the form of providing any service. If you're buying any government paper, the fee that is charged or the price that is charged, this all goes in the non-tax receipt. Direct taxes of the federal government are income tax, workers' welfare tax, capital value tax. These are the major direct taxes of the federal government. And indirect taxes are sales tax, federal excise tax, customs, and there are other smaller taxes of the federal government. So these are the major components of the federal government taxes, direct and the indirect one. The federal revenues, the non-tax receipt comprises of property. It could be which is on a receipt which is levied on property, and enterprises on civil administration. For example, all the challans which are there, they are part of a non-tax receipt, and many other small fees and tokens as a citizen one has to pay. So these are non-tax revenues or non-tax receipts. The organization which is responsible for collecting federal taxes is Federal Board of Revenue. For collecting, it's a huge organization which has its offices in regions. It has got regional tax units, and it has got large taxpayer units in regions. There are about 11 wings in the Federal Board of Revenue, and there are 9 field offices of FBR. So it's a huge organization. You can go to its website and have a critical analysis of FBR. Budget really reflects the revenues and expenditure of a government, and it also reflects the government policy, and it also reflects where the money is going, where the money is being spent by the government. The revenue side comprises of tax and non-tax revenues, and it has 2 parts. Tax and non-tax revenue has 2 parts. The revenue side has tax and non-tax revenues. It has 2 parts, which is revenue expenditure, which is and then there is a capital expenditure. So revenue expenditure really means the expenditure which the government spend on those organizations, on those institutions for running of the government, right? So that's a revenue expenditure, because if government is the government is spending this revenue expenditure to generate revenue. It helps or enables the government to generate its revenue, both tax and non-tax revenue. So it is spending money on its infrastructure. Then there is a capital expenditure, and capital expenditure is that expenditure which generates new assets. A government makes investment, for example, if it is making roads, or if it is constructing powerhouses, or if it is constructing dams, then these investment are assets, and it's going to generate more income to the government. The revenue expenditure, as said, is a day-to-day current expenditure of debt servicing, defense, civil administration, grants, subsidy, and social benefits. Capital expenditure creates asset which produce more potential for the country. This includes investment in physical and human infrastructure. The capital expenditure is generally met from revenue surplus, from revenue expenditure. Whatever is saved from the revenue expenditure, that is, whatever is saved from current day-to-day running of the government, then it goes into or after paying all its debts and etc., it is then invested in capital expenditure.